The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the March 3rd, the magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do this, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it to Steve at TFNN.com. Inside that subject heading, please put radio show question. And, of course, if you're inside the Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. First, we've got most U.S. indices trading the downside. The transports are up 3. Dow is off 68, S&P 14, NASDAQ 139, Russell's down 8. Now, I've got the charts for the ES Mini up on my screen right now. I had mentioned there's new profile, so we're kind of going back and forth. It's back up right now. It's a bullish structured profile. The bullish structured zone, or the buy zone, if you will, is between 59.10 and 59.41. A close today about 59.41. We're at 59.53 today. Ought to increase the odds of a move up towards this oscillator and change line, 60.15. If price were to close above that, then we'd be looking at a move back to the top of its profile, new profile it is, and that is at 60.66 out there. So what we'll do is I want to take a look at a little bit more in-depth look into the equity futures and some of the other futures contracts. So we'll do that. But before we do, I do notice a number of TD9 count signals out here. So let's take a look at those. Let's explore those. These are daily signals that we're looking at. You can see on my XAU, the grayed out area right now, you can see it's got a -8 and a star. The star tells us that, the -8 tells us bar number 8. The star tells us it is a valid signal out there. And that valid signal is a bottoming signal. In order for this to form a TD9 count bottom, the XAU is going to need to close below the close of bar number 5 today. That close is 157.46. We're trading above that right now. So it's very possible we won't get a TD9 count pattern here for the XAU, but you do want to keep your eye on that. That would be a nice bottoming signal. If not, what do we have here? Well, with price being below its a daily oscillator and change line, just a counter trend move up towards resistance is how I would call it, at 160.90 out there. That's on the XAU. We've got a star on the 30-year. Let's 30 and the 10-year. Let's take a look at the 30-year. A treasury out here, bar number 8, that says that today is going to become bar number 9 as long as price closes above the close of bar number 5. In the case of the 30-year treasury, that amount is, or that level is, there we go, give me a moment, just waiting for my, I would be at 117.13. So as long as we close above 117.13, you'll get a TD9 count top today. That pattern will complete tomorrow. That's happening just below TD9 count breakdown resistance. We ought to see a move back towards this oscillator and change line right around the 116.18 level out there. If we take a look at the XLV looks like it's going to generate a TD9 count top today. Of course, that is subject to making sure that it closes above the close of bar number 5. I'm going to give you that level here momentarily. The close of bar number 5 out here. Just have to wait for this thing to populate. The close of bar number 5 today is 148.89. 148.89 is where the XLV needs to close above. having troubles here. It needs to close above in order to generate that TD9 count top that would complete tomorrow out there. The weekly we can see is in bar number 8 as well. This is telling us it could form a TD9 count top between this week and the next 2 out there. The real estate sector, the XLRE, also likely to form a TD. Now, about 90% of the time that a successful bar number 8, that's what the stars mean next to that number, that's a successful TD9 count. That so far bar number 8 is a high of that signal. 90% of the time these do come in, these do turn out to be TD9s. In order for the real estate sector to form bar number 9 today, it just simply needs to close above 42.87. We're at 43.55 as we speak right now. Its weekly chart also in bar number 8 of its move. What else do we have out here that we can take a look at? Let's take a look at Adobe. Adobe also likely to form. Now, this is likely to form a TD9 count bottom today. Very interested to see what the weekly chart here is also signaling for us. The daily time frame, in order for a TD9 count bottom to form, it's going to have to pull back a little bit. It's going to need to close below 443.41, and we're at 445 right now. So maybe that's not going to form a TD9 count top. In the case of Adobe, counter trend moves would run in resistance between 449.06 and 455.71. If we take a look at the GDX, it's going to be much like the XAU out there. Again, it's going to need a close below the close of bar number 5. This is a TD9 count bottom. Bar number 5 right now, its close is 40.38. We're printing at 40.35. There's a new profile that is also formed inside of the GDX. You have support at 39.38 and resistance up at 41.37. Anglo Gold Ashanti, AU. That has a TD9 count bottom pattern that completed on Friday out there. So this should rally up towards, on the daily time frame, well, it should rally up towards its oscillator and change line. But what we can see is prices below a brand new profile that is formed. So the level to be watching on AU this morning is going to be 30.76. Does that just hold as resistance? If price is able to close above it, we ought to see that move into its sell zone between 31.68 and 32.14. I think I have taken care of all or most of those TD9 count signals off of the summary chart that we take a look at to determine what's going on inside the markets. Let's go take a look at some intraday stuff. So let's see what pops up first. I believe it is gold, and it is gold. So in the case of gold, it's had a heck of a nice rally. You're going to be in You're in the bar following bar number 9 as we speak right now. That says that gold, and the 2-hour time frame chart, that's for a TD9 count pattern. That says that gold has either topped, short-term top perhaps, or will by 2 p.m. today. And then we should see price pull back to test support. If it's trading by 2 p.m., well above 28.96, that would be the first level of support. The second level of support would be 28.79, and below that would be about 28.72. As we look at the other intraday time periods for gold, I see the 60-minute time frame chart. Let me just repopulate this for you. You're going to see a TD9 count pattern that is going to go ahead and confirm at 12 noon, complete at 1. So it does look like the intraday charts are signaling to us we should see some type of short-term pullback inside of Goldilocks. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We were talking about the ES Mini and, or maybe it was gold and its TD9 count. I think it was the ES Mini. All 4 of the equity future contracts show TD9s. There's only 3 of them that are truly active. That's one for the ES Mini, that's one for the NQ, and is the one for the Dow Equity Future contract. The TD9 count pattern for the Russell 2000, the high formed on bar number 3, so it wasn't really an active signal for us. Now, remember, when we get a top out here, any kind of a top, what price should do is pull back to support. One of those key support levels that we use is the oscillator and change line. Now, in this case here, well, in the case of the ES and the NQ, the oscillator and change line is red. It has different meaning than the green one for the Dow Equity Future contract. The one for the Dow Equity Future contract is much stronger. A green oscillator and change line tells us that the price oscillator, the difference between the 19 and 39 period exponents moving average, is above 0. And if it's above 0, those conditions are bullish. Now, prices pulled back and tested. This is Dow Equity Future contract. This is one to really keep an eye on out here. Prices pulled back, has tested. All 3 of them have, so all 3 of them you'll keep an eye on. But the key level to be watching here is 43,838. If this level holds, we will rally up into that TD9 count top for the 2-hour time frame chart and potentially negate it. To the downside, the next level of support for the Dow would be at 43,646, the Dow Equity Future contract. In the case of the ES Mini, it has held its red oscillator and change line, so not as bullish, not as strong as the Dow. Nonetheless, a key level of support thus far is held, 59.44. Below that, if price were to close below that, we'd be looking at a move to either 59.16 or 58.61. Likewise, a close above its high, and I think we already took a look at that. We're off to the races to the upside. In the case of the NQ, to the upside, the number that you're watching out here is going to be the high that came in the last half hour, 21,121 even Steven. Price closes above that. You're off to the race to the upside. Maybe even 21,813 would be in play out there. So we have 3 of the 4 that have valid TD9 counts that each have pulled back to test support. So far have rejected support out there. And that suggests that we could see a rally unfold out here. If we go back to... Sorry, I actually had to pull that off of the old charts that I used to do and then move that over here to this page. I'm going to go back to the I think it's the ES, yeah. Now, the shortest term time frame I have here is a 10-minute chart. So I'm looking for, because we've got that signal on the 2-hour time frame chart, that maybe we've bottomed, looking for any kind of signal. I don't have anything really on the 10-minute chart. I don't have anything. Well, let me just make sure. Just make sure I repopulate everything here. Yeah. So I don't have that bottom signal that we would like to see on some type of intraday chart out here. Doesn't mean that we'll get it. Here on the 4-hour chart, 240-minute chart, the profile is formed below price. That's a bullish signal. That's the best that I've got for you as we speak right now. Let's just start getting into some of the requests so I don't get too far behind. The first one coming in actually last week on Friday while I was gone, and I apologize, I did not write down the name of who made this request, which was looking for a buy or an entry point, I believe it was, into Ethereum. So when I take a look at Ethereum, what I'm kind of focused on here is the monthly and the weekly chart. I'm looking to see if there's any kind of bottom signal out here. So we take a look at Ethereum. We know that Ethereum was testing a TD9 count. Now, the open of that TD9 count, that's key. That was at 2254. Did we close below that on Friday? The close on Friday was, that wasn't right. The open was 1851. No, I had screwed that up. And the close on Friday was 1851. So really right on the number. Volume on that swing point, bar number 8, 31 million shares. Friday, price moved into it with 25 million shares. So there's a test and rejection on lighter volume out there on the weekly time frame chart. So that's a positive. The issue with sometimes trying to identify a bottom in Ethereum is the number of gaps that we have here. Usually you can use a gap like on an equity instrument, a stock itself specifically. You can use a gap, a rising window, falling window, whichever, as support or resistance, or a signal, a bullish reversal candle or a bearish reversal candle. There's clearly A to B equals CD patterns to the downside on the daily time frame for Ethereum, but the gaps are so easy to find, and we gapped up today. I'd be hard pressed to say with any kind of real conviction that that's a confirmed by the D point pattern. Here, I think what you've got to watch for on the daily time frame would be its oscillator and change line. That's at 1982. Prices below that. That's not a bullish signal out there. The monthly time frame is just a consolidation with inside its profile. The profile extends itself all the way down to 1268. We're trading at 1916. So the weekly time frame gave you a signal of maybe a 2-day rally that we could get out here. Maybe. Time will tell. You also said you wanted to take a look at Bitcoin. So let's take a look at Bitcoin out here. We're looking at the March equity future contract. Here, there's an A to B equals CD pattern to the downside, and this also gap to the upside. Now, there's not as many gaps. Let me open up the daily time frame chart. Guys, I should almost not do that because of problems. I'm going to do this. So I'll just stretch it this way, and then I'll unstretch it. Because it's the March contract. There's still a lot of gaps out here. Here's what I can share with you. What Bitcoin is doing right now, it's rallied right up into resistance, and that is the bottom of its profile. The bottom of that profile is 95,376. So that would be a level to watch. The weekly time frame chart, which has a Rhodes momentum indicator top, closed below profile support last week. A second close below profile support this week would open up a move back to 62,010. Out there, the monthly chart not really assisting us with much. So you've got, in essence, a valid by the D point pattern. How valid it is for Bitcoin is uncertain, and the reason is because it's a gap to the upside that has created that signal out there. So my apology, because I didn't write down who had made those requests, but I do hope that provided you with the information that you were looking for. Robert is wondering whether or not now is a time to buy or take an entry into Caterpillar. So when we look at Caterpillar, and I'm going to do the same thing here, Robert, which I'm going to start with the longer term time frame first, especially in that you are a longer term trader out here. In the case of Caterpillar, which has a Rhodes momentum indicator top and is trading below its oscillator and change line, it suggests that you should be patient and let price enter its buy zone. And that buy zone is between 1820 and 329.34. Now that's the message of the monthly chart. We can see that last month was month number 1 to the downside. Still a bullish market here, but maybe what we're going to get, which would be normal, is a 2-bar knee-jerk reaction move to the downside inside of Caterpillar. So just look at the monthly chart, because I haven't looked at the weekly and the daily just yet. Just keep my eyes focused here on the monthly. I think 318 to 329 might be the better area for you to watch and observe. Now, let's go look at the weekly chart. The weekly chart has a Rhodes Momentum Indicator top that's in place. Price is trading below profile support. We've been below it for 4 consecutive weeks right now. It looks more likely that the weekly chart wants lower price. No bottoming signal, not near any kind of support. It'd just be kind of dangerous to buy here. Was last week a one-hit wonder and one rally, and then we're going to continue to head south if that's the case. That 318, 329 sure looks pretty nice. And on the daily time frame chart out here, I don't have any kind of a bottom signal, but I'm going to make sure of that. But I'm pretty sure we don't have any kind of bottom signal. So, Robert, I'm suggesting you wait to 318 to 329. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are February 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the chart here for NVIDIA up on our screen. This for Tom G. And Tom just looking to get a feel for what the charts say, where NVIDIA is going, what it's doing. So let's take a look at Friday's action and today's action. Why? Because on Friday, what price was doing, it was testing its swing point from February 3rd out here. And that swing point had volume of 371 million shares. The volume on Friday was a test and rejection, but on more volume, 389 million shares. The one thing, well, Tom's taught us many things. One of the things that Tom taught us is really that it is at the swing point where the market squawks, walks, and talks. And volume was the most important thing for him there. And if you test a swing point and you do it with volume, it tells you that you're going to be back up or back down there to test that swing point again. In this case here, back down there, and it was a test of the swing point high. And so far, that is what has unfolded today. Now, we've been trading for 2 hours, and the volume on today's trading is 115 million shares. If we multiply that times 3, we get what, about 350 million shares. That swing point has volume of 371 million shares. So it's possible it's going to be lighter volume, but it could be the same or similar volume. So if it's lighter volume, we've tested and rejected. As long as price remains above that high, and that high out here, Tom, is 118.57. Then perhaps we're going to see is a couple-day rally, NVIDIA getting into the 127.50 level. If we close inside that swing point, then price is more likely going to go test that low, perhaps even take it out. Why would it take it out? Well, if you take a look at support on the monthly time frame, which has a Rhodes Momentum Indicator top, you've got profile support at 109.42. You have a Rhodes Momentum Indicator TD9 count top on the weekly time frame, with price also consolidated with inside his profile, but it has found support at that all-important breakout level of 114.86 out here. So you're more interested, I believe, Tom, in what's going to happen today or tomorrow or the next day. First, watch that swing point. Second, I know you're in a long position already, no problem. And on a rally, the area you'd be watching is right around 127.50-ish. That's the oscillator unchanged line out there. So that's what I see when I take a look at NVIDIA. Today's volume looks like it's similar to that swing point out there, so it's not out of dodge, so to speak. Marty wants to take a look at ticker symbol GORO. So let's go, Ro. We take a look at this. What do we have going on today? Well, there's a TD9 count pattern that completed on Friday. There's a new profile that formed on Friday as well, and that made 49 cents, that resistance level. What you need to see is a close above 49 cents out here. This is for Marty on the daily time frame. For this to begin its next leg to the upside. We also on the weekly time frame have a TD9 count top. Its high is also 49 cents. Now, the volume on that candle for that week was 22 million shares. Not going to really give you today's because, you know, for the week, that doesn't matter. But Friday's session, we were up with 6 million shares. So far in 2 hours of trading, 2 million shares. So it's got that similar kind of volume. Goro trying to move, trying to push higher out there. Closes above those TD9 counts, that should take us to higher price. Monthly chart looks very nice. When I say looks very nice, prices trade above profile resistance. So you've got 49-cent profile resistance for the daily and the weekly time frame. Those are also TD9 count topping patterns. A close above that, and Goro should continue to move higher out there. A price target that we have would be longer term, much longer term, would be $1.79. That's its TD9 count breakdown level for its weekly, for its monthly time frame. So Marty, thanks for writing in. Have a magical Monday. Jambalaya wants to take a look at ticker symbol BTAI, Bachman Turner AI. And this thing is moving this morning. It closed out on Friday at 216. Trading right now at 542. That's a healthy move out there. It's backed off a bit. Why is it backed off a bit? I can't say for certain out here. What I can say, though, Jam, is that if you look at the weekly profile, it is a bullish structured profile. That price has been below for 5, 6, 7, 8 weeks out here. So a counter trend move in BTAI will find resistance at 682. The actual high so far of the day is 683. God, you got to love that. So I don't know if we're just taking a bit of a breather because I don't have any short-term charts up on my screens out here to take a look at. Or is this telling us, well, it was a nice rally, but rally's over. I don't know. What you're going to want to watch is that 682 level. I'm not seeing anything that suggests to jettison a position. That's for sure. If you're looking to enter a position, then we need to go look at some intraday charts out there. And I think you just asked me to go ahead and take a look at this. Just what do the charts indicate. So I'm really giving you that biggest and most important indication is that 682 level out there. I wish I had, what else are we doing? We're testing a swing point on a daily time frame. It's rejected it so far. That's a swing point from January 6, 6.4 million shares. Traded that day. Today we're at 119 million shares. So what that says then is if we do close below that swing point low 670, that what we ought to see is price get up and at least test that level again. The exact flip or the exact opposite of what we looked at in the case of NVIDIA for Tom G out there. So we got that exact opposite thing. So even if it backs off and it trades close below that, you should still go tag that level. But at week's end, whether it's this week or next week or any week out there for BTAI, it's going to be all about being able to close above 682. And that's the center of its bullish structured weekly profile that price been below for several weeks out there. The next request coming in is from Duncan Steve. And Duncan wants to take a look at the SOXX. As we take a look at it, let's start here with the weekly time frame as a monthly time frame. And then go to the weekly. Monthly time frame, a clear TD9 count, Rhodes momentum indicator top. A clear set of profiles that price is trading within. A bunch of narrow range bodies for the most part, but nonetheless, price is below the center of its profile, below its oscillator and change line. Over time, it may be seeking out support at 184.09 or below that, 167.64. So the bigger picture for the SOX is suggesting lower price. How about the intermediate term picture? We closed below profile support on Friday. We are below profile support today. Doesn't matter where we're at today, sort of does, but matters really on Friday. We're trading into a swing point from back on August the 9th. 30 million shares traded hands that day. On Friday, we closed inside that swing point with 17 million shares. So we are inside this swing point with lighter volume. Doesn't matter. If you stay inside that swing point with lighter volume, it increased the odds that you go test that bottom. Well, what's that low out there? That low is at 192.87. Am I saying that's going to happen with certainty? I am not saying that. Again, monthly chart suggesting lower price. Weekly chart really suggesting lower price, but you're moving into a swing point with lighter volume, so that starts to get a bit iffy. Does the daily chart clear things up for us? And I believe the answer to that question is no. But let's make sure. I'm going to have to open up this chart to answer that question. Steve Rhodes with TFNN. We come back from this break. We're going to take a look at what the semis SOXX is doing as it tests this swing point out here from the day of August the 5th. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're looking at ticker symbol SOXX. This is for Duncan Steve inside the Tiger's Den. Of course, when you open up the daily time frame chart, you see nothing more than the sideways consolidation chop that's out here. Now, what that chop is doing, and what it did on Thursday and Friday. On Thursday, it closed inside the swing point that we discussed or we identified from back in August, the 5th out there. Volume 9.2 million shares. It closed inside it with light volume. It was 4.4 million shares. Nonetheless, you closed inside it the following trading day. That was on 3.7 million shares. That 3.7, the high was 208.68. Let me just make sure one thing. Close 208.52. Yeah. So what you're looking for, so price keeps testing this swing point out here, Dunk, with lighter volume. Friday's test. 3.7 million shares. Again, versus 6 million shares. Versus 9 million shares out there. So again, these light volume tests, we're just not getting the rejection of that swing point out there. So there's not much more until you get a clear rejection. Price could easily get down and test the bottom of that swing point. Now that's what's coming from the daily time frame. Did we already take a look at the weekly and the monthly? I believe that we did. So that's what we've got for the stocks. Let's go take a look at ticker symbol O for Jambalaya inside the Tiger's Den. O is trading out right now at 57.25 inside its daily profile. That has support at 56.11 and resistance at 57.56. The weekly time frame chart, price is trading above profile resistance. That's a suggestion that this should rally further. Its longer term price target would be up at 64.88. That's a TD9 count breakdown resistance level. We can see on the daily time frame that O has closed above a TD9 count breakdown resistance level. So that's indication of higher price. There's a swing point that was taken out. The swing point on a daily time frame was from January 27th. There was 6.1 million shares. When it was passed with 5.2, 7.3. So now we've got a confirmed A to B equals CD pattern to the upside. Nice Rhodes Momentum Indicator bottom has turned into an A to B equals CD pattern to the upside. Give me a moment. We'll copy, we'll paste, we'll assemble. Now we'll assemble the troops, and you can see the 1-to-1, not much further than above the top of its profile. 57.56, 57.81-ish is where your 1-to-1 price objective is for ticker symbol O out there. Monthly time frame chart is back inside its profile, so that no reason for it to not continue to rally. That rally could take up to its next battle would be at 60.35 out here. So watch 57. 57, 56, and then watch that daily time frame. If it is able to get above that, you could begin to, and what you're watching for there then would be a bearish reversal candle that would identify a sell the deep point top. Short of that, price is likely to rally further. Let's take a look at natural gas for Joe, and Joe is really looking for resistance out here. I thought I did natural gas. Did I do this? What did I do? Give me a moment here if you don't mind. I didn't put, oh, I know what I did. I put it right here. So I did do this for natural gas because you're looking for resistance. And that first level of resistance, which price is taking on right now, that I was going to give to you is $4.06, 4.065 to be exact. 4.065 happens to be the 4-hour and the 5-hour TD9 count breakdown resistance level. Both those time charts have TD9 count bottoms. So the candles, the 4-hour time frame chart is not going to complete until 2 p.m. The 5-hour time frame chart is going to complete at 2 p.m. as well out there. On a daily time frame, 4.036. Price is trading above that. That's a green oscillator and change line. So, Joe, as long as price closes above that, it increases the odds of a move to go test its TD9 count top for its daily time frame. That is the candle session from back on February 20th, and the high at $4.34 out there. So that's really your resistance level. Let me populate a few of these charts out here just to get caught up on the number counts. So give me a moment for that. 15-minute time frame chart. Likely to form a TD9 count top at 12 noon, complete that pattern at 12:15. That suggests that price could then pull back to its oscillator and change line right around 4.01 out there. I don't see any other topping signals out there. So that's what we've got for natural gas. Those are your resistance levels out there, and as well a TD9 count top to keep an eye on for its 15-minute time frame chart. The next request is to take a look at, nope, that was a SOX, PPTA. My apologies, it's going to take me a second to find it. I guess, let's see here. Did I put it here? I did. No, this is for LB, and LB is looking for the buy zone. So LB, this forms a daily TD9 count bottom pattern. It does it on the bar following bar number 9. That was on February 24th. So that was really your buy signal, so to speak. Now what has transpired since then is you have a new profile that is formed. The new profile has support at 824. It is strong support. That is both the center and bottom of its profile. The top is up at 1038. So what we have is prices rallied today into its red oscillator and change line. That's at 896. If price were to close above it, because the top of that profile is at 1038, I'd say go ahead and chase it. But it hasn't closed above it. It's found resistance there. That suggests that price should pull back. Now, we're still trading above Friday's high out there. We may close above it. So we know it's not like I can say we're going to get a, now that would be a 2-bar move to the upside. Maybe we're going to get a 2-bar move to the downside. But I believe you have and on a weekly chart, PPTA has rallied into the sell zone of its bullish structured profile that price should close below for 2 consecutive weeks. In other words, the area where counter trend moves would come to an end. I wish there was some way to know whether they would or they wouldn't. We don't. But 906 to 952 is your sell zone there. The monthly chart still looks pretty good, although it's got a TD9 count top. But prices held that green oscillator and change line. My answer to you now is the buy zone is as close to 824 as you can get out there, because you got the TD9 count that would be below, so that's a little bit of protection. That low out there, this is where you would close out a new position, would be a close below 781, because that TD9 count pattern would have failed, and the weekly below profile, maybe that's telling you about getting back to the 753 level. So I hope that helps you out with regard to PPTA. Jamba writes in and wants to know what is going on inside of ROOT out there. And ROOT is taking on its high on its weekly basis. It is going to likely form a TD9 count top. It'll complete that pattern next week. Now, in order to complete that pattern, Root must close above the close of bar number 5. That was the close from February 7th, and that close was 112.03. As long as on Friday price is above that, you've got your weekly TD9 count top. Your soup du jour, what do we have to go with that? Not much, because the weekly time frame is suggesting that it's trying to form a new A to B equals CD pattern to the upside. What say you, Rhodes? Well, what you're watching out here is going to be 141.23. That's the high from February 13th out there. Volume was 768,000 shares. Today, you're pushing with 367. That's pretty good volume. Price is pushing to that swing point with volume. It's going to, if you close below 141.23, you're at 142.86. You'll get back up to at least test that swing point high. Again, that number. Of course, I come up with those other numbers. 1 to 41.23. That's the number of price. If you close below it, it'll get back up there. It should get back up there to test it. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. Let's go take a look at Meta. This is for Dennis in West Palm Beach. Meta right now on its daily time frame is consolidating with inside its daily set of profiles. It is in a buy. It has a buy zone between 651 and 660. We're trading above the 660 level. That's an indication that Meta should at least rally up towards its oscillator and change line. That is about 694. Call it 695. Call it whatever you'd like. But a close above it would then signal a move to 717.97. At the same time that the daily time frame is suggesting this might want to rally. The weekly chart, which has a Rhodes momentum top, formed a support at the bottom of its profile, 662. No reason that it shouldn't rally there. In the monthly time frame, prices trade above profile and oscillator and change line resistance. No reason for it to not rally as well. So Meta looks like it wants to rally at least towards the 695-ish area out there. So I hope that helps you out. Dennis, thanks for writing in. We've got a question from Y, inside the Tiger's Den, who's interested in taking a long position in wheat. And I say you've got to wait just a few more days at least. Why? Today is bar number 7 of a TD9 count. You wanted me to look at the May contract out here. Price is trading below its breakout support at 558.50. So I'd wait. This is approaching a Rhodes momentum indicator bottom. Price has bottomed back here recently. I'm referring to December and January. So this is an area where we may find some good support, 537-ish out there. Turns out at 546.15, it's the bottom of the weekly profile. So in the monthly, it's in bar number 9 as we speak right now, but it needs to get below the lows in order to form a TD9 count bottom pattern. That means I would have to at least tick below the 537.75 area. So I'm going to suggest a Y, that you not take a long position inside of wheat right now. Let's take a look at this over the during the week out here. Folks, stay tuned for all the great programming. Great to be with you. Have a magical Monday. I'll be back this afternoon about 3:15 or so with Jacob. So have a great day, and I look forward to seeing you soon.